A new era is upon us. Pulse has taken the world by storm as the leading Web3 social media. Beyond current features like casting, tipping, inscription trading, and earning, it's now elevating to the next level, on-chain.
Soil, a fully regulated, seamless link between traditional finance and the digital crypto world, offering secure returns fully backed by tangible, real-world assets.
The Credifi testnet is live, so head on over to demo.credifi.finance to see how you can effortlessly experiment with autonomous earning, NFT corporate bonds, Credi and X-Credi utilities, and Module X.
Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone a couple of minutes past midday, making it a few minutes past UTC. A big shout out to everybody joining us live today from around the world. Can see Suleiman K in for the win. Well, certainly since I joined. Anyway, Bern, great to see you. Geo as well. Several hundred people flooding in every second of the moment, which is an awesome thing to see. Happy Monday to everyone. So we're going to start, as we normally do today, with Bitcoin. Can everybody please just let me know, or just if you happen to be in the chat, hey, Raphael, how are you doing, my friend? Can everybody just let me know that you can hear me okay, that you've got the visuals okay? Just make sure that I'm not sat here chatting away to myself. So just while you do that, if you see a screen moving and no audio, please do just pop something in the chat. Obviously, if you can hear this, I'll give it a few seconds and make sure we've got everybody on board just while we get everyone starting to come through. So let's take a quick look here. We can see and hear you. Thank you, Geo, eyes and ears. So, guys, and Erica, good morning. Apologies, the chat on this one just starts as soon as the advert's finished for me. So if there are some people who said good morning before that I've missed, I'm very, very sorry. So I want to start on the weekly chart here as well, okay? So something that we share over at the Bird Nest on a daily basis is our Bitcoin report. It helps kind of keep everybody in touch with the market. We share it amongst the different members of the analysis team. And from that, we have really, really good discussions on a Monday evening. Once we've got the Monday kind of come to the close of London and then the New York AM session, we jump on a call together and take a look and kind of collate our thoughts on the market, really. So on a weekly scale, this red line you can see up here is the previous all-time high from November 2021. Why is that on there? Well, for me, it's a really, really key level. We've failed twice now to really kind of break out above it. If we look at it here, we can see what happened. Price kind of came above here. We got this deviation. Ultimately, price rejected and came back below. We then got a deviation again here, setting also a failure swing, meaning that this high failed to come and take this one. And then price got back below this level. Now, when we've seen price get back below the level, we've typically seen weakness here, okay? So if we look at this over here, zoom in for you, price came up, long wick to the downside. Look how well respected this level was. Then this one, I know I've said this before, was quite a cheeky one because we had this, it came up and we had the close above showing a bit of strength. So you would then think, okay, probably reaching for liquidity above here, especially coming off the back of this pin bar candle here or hammer candle, you know, pin bar, you might hear this with a short nose. Then we had another kind of pin bar candle. This wasn't crazily encouraging, but it was encouraging that the price came all the way down here, took the prior week's liquidity and closed above. However, then what we see happen here is on the close of that candle, we confirmed this as the swing higher and price ultimately opened, took liquidity above that high and then sold off. Now, when we got back down below here, like we said, we would see that as a sign of weakness, in which case, where do we then expect price to head for? Well, first of all, we had this swing low down here. All right, so price came and took that liquidity. However, whenever we take liquidity above an old high or old low, being external liquidity, credit to ICT, then you would look for price to rebalance a gap. So ultimately, we took external liquidity here in the form of this high. Price then came to rebalance this fair value gap, right? Gave us a nice dynamic on the market when we had the suspicion that price was drawing down to this gap here. Then we had a lovely recovery candle here, again, similar to this one, right? We had a pin bar candle, small body here and a short nose. And then ultimately we expect price to move higher. Now, again, once we react to internal liquidity, which is this fair value gap, we look for price to push towards external liquidity. The first point of which was this. And the second point of which was this, okay? Now, what you'll notice is we took the external liquidity here, right? And then as we came up to here, we set this fair value gap. I'm just going to change the color of this for a moment, just so that you can get into the mindset of how we're looking at this. So that's bullish then. This candle then prints. We say, okay, we've taken external liquidity here. We're now going to kind of head down to rebalance this. Price then continued up to just sweep this high here. Okay, and then ultimately we came back down. Now, while we come back down to this, yeah, we would look for this area to provide support. So when we close through it, violating this, inverting it, it then changes it to a fair value gap inversion, FVGI, when you see either a W on the end or H followed by a number or M followed by a number. It's just depicting the minute or hour or time frame that the gap is on. So why is this significant? Well, quite simply, when we see this offer weakness here, we then look for price to seek liquidity lower. Now, the ultimate target is this low down here at 56,697 here on Femex. It doesn't mean that we have to come and take this low out, but technically, you know, we violated internal liquidity now. The expectation would be for price to come down for external. Now, we didn't quite get all the way down to here, right? So now we really need to see how kind of price plays out from here. And we're going to kind of get a little bit more of a granular look on that as we move down now onto our daily chart. By the way, guys, if you have got any questions on this, or if you've got anything you want us to take a look at, if we've got time at the end of the stream, please do let me know and we will certainly try our very best. So let's pop on the daily here. Now, let me just kind of tidy up the 4 hour here because we've got a few bits and pieces kind of sticking out. And the reason this is on here is because this is the exact analysis that I was sharing the last evening past in the Bitcoin report. So let's just hide these bits as well, just so that we've got it a little bit cleaner and we can open them up in a second. So using the same principles here, obviously we saw the weekly close below here. So we knew when we came in, you know, Monday, we got the sell-off. And actually, we had the majority of that drop. It was a really, really big drop on Monday. And then we had this consolidation. Now, let me just tidy that up as well. So now what is price doing? Well, quite simply, and looking at our liquidity principles again, we've had a big corrective move here lower. Price very rarely goes in one direction for too long. But often people take profit, for example, the market needs to find liquidity or it needs to rebalance to become efficient. So we had this low, again, a low within a fair value gap, meaning that the offer should offer a really nice liquidity pool. And that's where price reacted from. Now, this here is our high time frame, obviously our weekly fair value gap. I'm not too worried about price coming into this area. I think price would look to seek liquidity below this low, right? But in doing so, we have created another swing low down here on a daily scale, which is at 58,420, okay? So what does that mean? Well, it means we've taken external liquidity here. So when we do that, what's our expectation? The price then looks to move to internal liquidity. So that's why we've got our fair value gaps marked out here. So for me, these really set the condition at the moment, right, for the week. Whilst we remain in them, they are bearish. Okay, so for me, there's no shadow of a doubt that while we're in here, the expectation is for price to move lower, right? It doesn't mean that as we move down through the time frame, say, for example, which we'll look at shortly on the 4 hour, that we wouldn't take long setups should they meet our entry criteria. However, we need to be aware that we're in a bearish state of delivery, we're in bearish market structure, and that while these are overhead, the likelihood is that price is going to be seeking liquidity lower, starting at the current swing low here, which is at 60,136. And then obviously we know we have this other swing low here just above the weekly fair value gap, which again is at 58,420. Now, what would change my thinking on that? Well, quite simply on a daily scale, remember the time frame is what provides our context here. So on a daily scale, what would make me bullish on this time frame is for price to close above these gaps. If we close above these gaps, I'll just use the top one as an example, we then have an inversion. So the opposite of what we had here. This was a bearish inversion, meaning we expected bullish support here. Look, price failed to get the bounce closed below. Obviously, in this case, it was on a weekly scale. And then price did what we were talking about, comes down to seek liquidity, right? So with this one, it would be the opposite. So if we close above this, this should be offering a rejection. Closing above it would just show that the selling pressure isn't there and the price is seeking liquidity higher. So then we would be bullish, and I would be favoring long setups to the immediate liquidity, which is the swing high at 66,455. So hopefully that made sense. Basically, when we're within these gaps, we need to show caution because this is designed to reject price here. Price has come down, swept liquidity. Yeah, that's the dotted line that we've got here. Then looks to rebalance an inefficiency, which is one of our gaps here. We can see we've drawn up into the higher of the two here. Remember to invert them, to violate them. We need the close. We don't worry, they can wick all the way up to here, but as long as they close within, we still retain that bearish bias. So now our expectation is for price to head lower, probably starting with this low here, and potentially lower down still. Now, price doesn't have to follow that. In fact, price very rarely listens to what I want it to do, which is why as an intraday trader, it's really important I have a plan to trade this both ways. So if we now move this onto a 4-hour, which as an intraday trader, I use this as my high time frame. I'm just going to turn the session breaks off. For anybody interested, maybe anybody new to the show, see we've got about 1,500 people at the moment, which is really cool. Session breaks, these just depict the different days, right? Just helps us as an intraday trader find liquidity resting below prior days, prior weeks is a key part of our setup. But you can access this by going to your chart settings, events, and then session breaks. But I'm going to turn them off just so it looks a little bit cleaner. Now, again, we want to remember, as we can see here, this is a weekly inversion. This fair value gap here has not yet rejected price. So that is, in fact, still just a regular gap, as is this one here. I'm going to turn them back to grey, which is how you'll see them typically on my charts. Sometimes, just for education purposes, I'll turn the red ones, the bearish ones red and the bullish ones green. If that really helps you, by the way, let me know, and I'd be happy to do it. So what does all this mean on a 4-hour scale? Well, again, to harp on and sound a little bit like a broken record, this fair value gap here as an inversion, and in fact the one above it here, so I'll draw this one in as well, have been really key. And you can see that we had this lower one here too. Now, why have they been key? Because like we said, when this, which is supposed to offer resistance, fails to do so, yeah, and then when we close above it, and look at the way price does it, just big body candle, big expansion, right? What happens there? Well, a couple of things. One, we shift structure, yeah, or you could argue break structure here because you've gone from a low to a high, higher low. Now you're blasting through that to set the higher higher. So as we've broken that there, what do we then look for? We look for displacement. You look for energy. You look for an energetic move higher, a big body candle. Look, and I never, SC's voice always ringing in my head. Such a legend, such a big inspiration in my trading career. Small body candles lead to big body candles, right? Look at where the momentum is. Look at where the kind of, and while this may not technically be true, depending on what your theory is on the market, I like it as a statement. Look at where the buyers have stepped in. Yeah. Look at when the momentum in the market tells you that this is looking to go, right? Look at what happened when we came down and we had this bearish gap here, right? And I'll do this one in red just so it stands out. Price had an aggressive sell-off, broke through an old low over here, displaced, left this gap where it was just all sell pressure in here, which means orders didn't pair there from both sides. Market looks to rebalance this. Look what happens. Bodies hold within here, small body candle, small body candle, small body, bigger body candle here, and then we start to sell off. And in fact, this has been significant all the way across here because look, resistance, resistance. Now look at this, strong close above. So why am I rambling on about this? Because this is really, really important. Look at what happened here. Resistance here. What happened? Displacement. We closed above. What did we do? Formed this bullish gap. So where did we look to go long from? From here. As soon as we get back in the bullish gap, yeah, we're now in a bullish state of delivery. We should find order pairing here to go long, and we've got key liquidity targets above this high, this high, this high, and this high. Price ran them down nicely. What would have changed our thinking here? Well, quite simply, if price had failed to hold this, and this reaction had been a strong close below, then quite simply we're looking for lower targets of liquidity because price is telling us that it's seeking that liquidity lower. So the significance of that is let's look at this move here. What's happened? We've had an aggressive expansion here. Price has taken out a lot of liquidity above these highs. And has it looked like stopping? Let's just use the highest high as an example. Absolutely not. Look, when you see price reject at a high or a low, yeah, you normally see either a quick recovery beyond it, or you see something like this. Look at the wicks there. Yeah, price wicks above, comes back below, tells you that it's just not getting acceptance. This here, especially then when it's followed by this, and we leave this bullish gap, tells me the price is looking to move up from here. And then if we look at our high time frame analysis, right, which is telling us, well, hang on a minute. High time frame analysis is saying, well, price could be drawing higher to these fair value gaps. We've got them labeled above. So how do we now say, well, where does price go from here? Well, we don't know, right? But what we have got is a set of parameters that we can follow. Very, very simple ones. Like we said, bullish gap, we expect bullish plays unless it's violated close below. So now on a 4-hour scale, this is absolutely what I'm looking at. Strong breakout, love it. Reaction at a high time frame gap, no problems. We don't know if price is going to look to move higher beyond that. We just need to be aware of it. So what am I looking for now? The same principles as we just discussed. Price has taken external liquidity above the highs, above this cluster of highs, in fact, yet low resistance liquidity. If anybody studied ICT, meaning failure swing, failure swing, failure swing, that one here did take liquidity from that, but left its high. So you've got 1, 2, 3, 4 untapped highs, 5 at the point that we had this breakout. Now, price has been drawn through and obliterated those. So now we're saying, okay, well, if price is going to then return to an area, to rebalance, remember, we've taken external liquidity. So we now look for internal liquidity, which is price to draw down into our fair value gap. Well, within here, then we're going to really have an understanding of what we're going to do. Favoring long setups for this push higher to continue, close below, and then we would look short. All right. So I don't know if anybody has any questions on that, but more than happy to kind of cover them. For me, the plan for Bitcoin at the moment is super, super simple. I want to see price coming down into that level. They're just going to get rid of the daily. So 4-hour for me today is really, really clear. I'm looking for price to draw down to rebalance this gap. So was considering, I don't particularly trade. I'm not a very active trader on a Monday. Actually, I normally like to see how Monday's range develops. But, this morning in London, I was like, wow, okay, this breakout here, look, because great bullish breakout here. And what does this do? This gets breakout traders to trigger long positions. What else happens? People over that have seen the weekend pump, the thinking down here it's over. You look on Twitter or whatever, and you'll see people talking about a break of structure, etc. And then people start kind of longing too late into these moves. What happens is quite often you see the market punish those people before it kind of then sets back in its direction. Okay. Now, again, that doesn't have to happen, right? But we've got a clear plan to trade this either way. So while we're here, then I'm saying to myself, okay, I'm looking for price to draw back down into this. Was considering some kind of little intraday shorts this morning in the London session. I then moved to the kind of 15-minute chart here, which is quite key for me. However, we can see, certainly for the way that I trade, I like using midnight opening price, which is 5 a.m. London time. And then for the New York session, which is what I favor the most, then use, the New York session opening time here. Again, these were ICT concepts. I studied under him many, many years ago in the original core content. Can't speak highly enough of it. I would say, use that, learn from a lot of good people. I learned a lot from Crypto Burb over the years, been a big influence on me, as well as the trading team that I work around, SZ as well, huge influence. My good friend Trader Dank, people like that. Find good people. You don't necessarily need to keep your thought process too narrow, but find a niche and really focus on it. And this for me has always been really, really useful, because the New York session is by far, the highest volume trading session. It's where we expect the most volatility. It's where we have the most effect for red folder news, especially in the indices market, which then normally feeds down into crypto. So basically, long and short, if price is below the New York AM trading session price, we favor long setups aligned with our bias. So like this one, for example, yesterday, lovely long setup here on Bitcoin. New York AM session, which for me starts at 1:30 in the afternoon. What am I looking for? Well, I'm looking for price to react at a higher time frame bullish gap, which is this big green box. I need to see a sweep of liquidity. And what made this such a beautiful sweep here was the fact that we took out all these equal lows at 1, 2, 3 equal lows here. Big reaction here. This was the dip for buying into, and then we really kind of saw this nice resurgence higher. Now, when it came to London this morning, I didn't really see enough of a pronounced move above that, but really did feel like, this big sharp move up here. This is Asia's range, by the way, in the red box. I felt like we could see this corrective move lower. So now I'll be waiting for around about 1:30 this afternoon, watching how price action reacts in here. When you see big gaps like this, you really expect them to offer some kind of support. So, without going too granular, because we need to remember the higher time frames really do take precedent, look at this inversion here on price. What happens? See, just as we closed below it there, yes, we've got smaller gaps down here as well, which we do need to be aware of. But when you see these big gaps violated, look what happens, right? Again, I know like a broken record, but we violated internal liquidity. So where do we expect price to head next? External liquidity, which is this low at 62,600. Now, how does price achieve that? Well, quite simply, as it broke down here, shifting, breaking structure here with a big displacement move lower, where could we have got involved in this? Quite simply, in here, price closed below, set this bearish gap. That's our displacement. That's where we look to sell. All right, didn't take the trade. Full transparency, don't really take that on money, but I did think that this is a really, really nice setup. So if we don't have any questions on that, guys, I'm going to go over and take a quick look at ETH. We might have time if anybody does have maybe one or two tickers that they would like me to take a look at, then please do let me know, because we can always jump onto those. Look at ETH over on our Bybit chart. I think this is maybe what we were looking at quite recently, because price action has just been so clean on here. Hang on. There we go. So actually over on our FEMEX as well, I'm just going to hide that gap for a second. We'll take a look at that when we're down on the daily. So what does all this mean? Well, quite simply, same principle here. External liquidity taken. This just line along here is the equilibrium of the high to the low of this move, right? And actually it's a little bit off there. Let me just adjust that. Okay, from the low, that swing low, to this high, displacement, big bullish gap. Yeah, so again, not teaching anyone how to suck eggs here. That's a delightfully weird British saying, by the way. This was the draw on liquidity. This is a bullish gap. We took external liquidity. We were looking for price to draw down, rebalance this, and move higher. Someone asked me at what point, because it's on a weekly scale, we'd have to wait ages to see the close below. So do we just stay bullish while we're in here? No. A really, really good thing to do is to take the low to the high of the impulse move, look at the equilibrium, which is just simply our 50%. Yeah. And then what we're saying is as price kind of holds across here, yeah, that's a sign of bullishness, in my opinion. Closes below, it's then, we can interpret that as maybe a bit more of a sign of weakness. But now we've kind of held this. I'm really interested to see if we can catch a bid here, right? Because look, all we've done here is we kind of set a high, price set this failure swing, yes, which is fair enough, but we took this kind of internal high here. But if we look at kind of overall structure, focusing on the clear and obvious, we've set a higher high, a higher low, and now a lower high. That is not the time to get bearish here. Yes, we were shorting into this because we expected price to come down here and find support. Why? Because this very well could be the higher low before we get continuation. And that's going in bright green because there's nothing, bearish about that, right? This is on a weekly scale. I'm not saying we're not bearish on lower time frames, but on a weekly scale, I can't understand people kind of getting bearish here. Yes, we've had this corrected move lower. Doesn't look like a lot on a weekly chart. I know there's a lot of hurt in there for a lot of people. But, just look how well respected this is. Yeah? So, look, I'm not saying we're going to moon from here, but I am saying, it's all about context. So, as I look here on the daily, Jesus, sorry, guys. I just realised the comments haven't been loading up. Let me just take 2 seconds and look. Thank you, by the way, everybody, for your good morning. Simon, great to see you on here, mate. Nit, as always. Yargo as well, brilliant to see you, mate. Trade to prosper. Hello, my friend. Suleiman K. And right, okay, apologies. Okay, so Super Shogun. Hello, mate. Take a look at that for you. Of course we can. So that is Drift. Oh, awesome. So a new one for us. Okay, we will take a look at Drift, my friend. What do you think of the 6 monthly candle close? Oh, okay. Well, let's definitely take a look at that. And we'll take a look at that on Bitcoin, no problem. Great, okay, apologies for missing them over there. Yeah, Nit, so again, making sure we're aligned with that, the red folder news as well. We'll take a little look at that. Hang on, let me put that in. Before we finish up the live show as well, guys. All right, Ilihan, thank you very much, mate. So, just finish up on ETH first, and then we're going to go across onto back to Bitcoin quickly, look at that 6 month candle, and then take a look at Drift as well for our friend Super Shogun. So daily. All right, now, let me just clean this up a little bit. Here, what were we looking for here? Again, broken record time, guys. I know I'm just going to leave this on here. I think it's a good kind of, it's good in a symbolic term to make us realize that while we're in here, yes, we short these while we're in structure, but to expect that we could very well be looking for something bullish here. So we swept out this low here. So what do we expect? If the low is external liquidity, which we've seen the sweep here, then we expect price to find internal liquidity, which is this bearish gap. So all of a sudden on a daily scale, things are looking really clear for me now because we've swept liquidity above this higher, right? So price has taken an external liquidity target. What I'd love to see is price close above this, right? Price coming up to here. We get this close above. You're very welcome, mate. All right. That's setting our bullish tone. Then we're saying, okay, now what we want to see? We want to see this area when that's closed above, if and when, then that turns into our inversion gap. Yeah, meaning we're now expecting price to see this as support and use it as a base to build. If we don't, right, then fair enough. We come back below it, then we can look, for weakness again. However, if we do get something like that, what's quite interesting here is that we would set this bullish gap if price action continues in the way that it currently is, right? Price couldn't come down and obviously fill this gap. But if we get the close above and we've got this, could very easily see price coming back down to here, wicking through. So remember, this stays intact, as does this, unless price closes below, and then using this as a base to move higher. I really, really like the look of that, right, as a play. I think it makes a lot of sense. But at the moment, we just need to remember that, yes, we're looking to kind of get this resurgence now. We had this nice move up yesterday, but we're currently delivering from a bearish fair value gap, right? So until we close above that on a daily scale, we want to show caution, but be aware that still short bias is in play until then. Intraday, obviously that can change, and we're going to take a look at this now on the 4 hour. But if we continue to reject below here, or we fail to close above it, then 3,351 here on Femex is the immediate swing low, followed by this one here. But I really like this wick down here as well, and I'm really not against price moving down a little bit lower, really inducing a lot more shorts, creating a lot more liquidity. Just stands more chance of the major players kind of getting involved if they can get their bags filled at a very consistent price where there's lots and lots of liquidity readily available for them to do so. Oh, sorry, quick sip of tea. So now we're going to move on to our 4 hour, and we're going to kind of build the context out on this. So all of a sudden, this looks beautiful, by the way, because remember, this is 4 hour, this is a daily. So the fact that, we closed above this on a 4 hour means literally nothing. We need to wait for the daily gap or for a daily low, etc. And then, that's how you can build that consistency. At the moment, this is a bullish gap, right? So quite simply, heading into the New York session, I'm saying to myself, well, do you know what? If we hold this gap here, yeah, and on a lower time frame, we see our nice entry pattern, right, which is we want to see a low. Why don't you redraw this a bit? I've done like a bit of a mong. Hang on. There we go. So why is this important? Well, you want to see liquidity swept, right? So liquidity gets swept here. Then you want to see the high that sweeps liquidity be broken, and you want to see it broken to impetus. Yeah. You want to see that move, you want to see that explosive move through it. Then what we want to do is use this level here to look for our entries, whether we're looking for, as we've done, previously, you come down here and then you look for the emergence of a bullish gap to be involved in here. It's really, really good way to play these things because you've got a great point at which you can make an entry. You've got a clear place of invalidation where you're wrong, and then you monitor your upside targets from there. So that's the kind of pattern that I'd be looking for on a lower time frame, maybe kind of on like a 5 minute, as long as we hold this. Now, if we close below this on a 4 hour, we've got 30 minutes to the close. I would very much see that as a sign of weakness here. And I'd be, okay, well, where's price likely to gravitate to? Well, quite simply, this swing low here. So I'll just draw this in on a 4 hour basis. So that is sat at 3,378.64 here on Femex. And then we've got another swing low resting down here, which is from our high time frame as well, which is 3,351.53. So quite simply, on a 4 hour scale, this is what I'm looking to hold and move higher from here, close below this. And I think the daily gap is probably doing its job of rejecting price, and we could see things moving low. Just a very quick glance over to the equity markets at the moment, and equity markets, I'm sorry, I should really say more kind of focus on indices. So NASDAQ, S&P 500, Dow Jones found themselves all up today. All right, Dow Jones almost up 30%, sitting at 0.30%. Dow Jones was up 30%. That would just be insane. The NASDAQ, which is represented by our NQ contract here as well, and ES, which is the S&P 500, are up 0.21% respectively. So normally, if we see strength in the indice markets, so you're seeing strength in the risk allocation here. You know, NASDAQ, for example, is very heavily weighted towards tech stocks, as is the S&P 500. So that risk bid is normally good for crypto. All right. So it just means that there's a foundation here. Doesn't mean it's going to happen, but it does mean there's a foundation here where there's a sign that the investment appetite is out there for risk assets, and crypto is very much a risk asset. Okay. So with that in mind, we then look to the dollar index, which is lower today, showing that the dollar is showing weakness when relative against other currencies, the basket of which is heavily weighted towards the euro. So what does that mean? Well, if risk is looking to catch a bid and the dollar is weakening, that's normally decent foundations for crypto. Now, crypto is very much its own animal, so, you know, we don't need to kind of overthink it, but it does at least factor some stuff in that we should look at. And like I said, we'll also cover the red folder news, which is news that's expected to affect the markets towards the end of the show. So while we're in here, let's just drop to the 15-minute quickly. You know, someone says to me quite a lot, okay, BC, you know, like we go on here and you see that it's great to kind of get this entry from here, but you know, what am I really looking for? Well, again, look, if you were trading this in the London session here as an intraday trader, right, you're looking for price to draw down to these key areas, into these gaps, right? In this case, it's setting up well for a long position here pre-Lund because you've got the New York midnight opening price. When we're below that, we favor long setups. We just haven't really had a reason to get long in here yet. You want to see a sweep of some key form of liquidity. You want to see some inducement. You want to see a reason to go long, right? So I think while we hold this big bullish gap here and we hold this one, I think, you know, we're really looking to favor a kind of turnaround here and rip this long. However, let's remember, if we get that 4-hour close below this, it would invert this and we would see that as weakness. However, nothing's 100% in the market. We could absolutely get the close below here and price could recover it. What I would say is if you see one of these violations recovered quickly, typically that's a sign that, you know, this is probably some kind of inducement or, you know, manipulation leg. And then a recovery of this would make me feel really bullish. All right. So that's the kind of line in the sand here on ETH. So just going to pop back to Bitcoin quickly and look at this six month candle, which Suleiman K brings up here. So let's see what one we've got, because you've got some markets here. I think Gemini is pretty old school as well. To be fair to it, Coinbase does go back a long old time, doesn't it? So because we're going to be looking at this on a 6 month scale, you really want as much data as you can get. So get rid of these old pieces. They would have been there from low time frames. Let's just save that as some old data block. It's always good to keep a track of these things, guys. You look back, see what your analysis was, see what you were right about, see what you were wrong about, etc. Use it to improve. So we had here from our friend Suleiman K. What do you think the 6 month candle close? It's an SFP on BTC. Love a little cheeky abbreviation and acronym to be in this industry, but he's absolutely spot on. Suleiman K. So for those of you that maybe aren't aware with this, a swing failure pattern is when price comes into a high or a low like this, and price comes, takes the liquidity here, and then comes and closes back below. If we closed above this, yeah, then we could see that as displacement, look for a gap like we've got this one, and for price to move higher. So let's just, you know, for those of you that know the show and for those of you that are here now, I'm a very simple creature. I like to keep things quite simple. So I'm applying the same parameters no matter what chart we're looking at, okay? Time frame, which is all about liquidity theory, yeah? So price comes up, takes liquidity above a high, look for a price to find and rebalance the fair value gap. When we've taken from this, the fair value gap, we then look for price to come and attack above a higher, right? It looks nice and simple, doesn't it? Obviously, there's a lot of nuance within this because each candle is 6 months, but that is the basic principle. Now, once again, our inversion gaps, yeah? So this was a bearish gap, Price should have found rejection here. Look what happened. Closed above it. What does it do? Inverts it. Exactly as we were just looking at on the 4-hour chart, right, guys? The same principle of liquidity, all right? Closes above, retest this. The next liquidity is up here. So now we've taken that. I think the concern, if you were looking at this on a 6-month scale, and now don't get me wrong, crypto can run really, really hot, but, we need to wait 6 more months for this to happen. But at the moment, if we've taken external liquidity there, and price is indeed heading for internal liquidity, and God, I can already picture the Twitter comments about this, right? Then, by the same theory, the expectation is for price to draw down lower. Now, do I expect price to go down to 38,579? No, I don't. Can it? Of course it can, right? So, these things have to be taken with a little bit of context. Now, what Sullivan K's rightly brought to our attention is the fact that, this is a big close, a 6-monthly candle, right? We've got to remember as well that, where are we now in July? So January, February, March, April, May, June, July. Yeah. What are we? 6 months in. So it's the start of a new quarter, start of a new month, right? Start of a new week. All of these things kind of factor in. So if we're then going to say, okay, well, let's look at our quarterly candle here. I think we can see as we overlay this that we've got the same kind of principles going on here. All right. Now, while we kind of set this gap in here, which is fine, we've had that breakaway. Look at the displacement, by the way, on this. We've taken out this high, right? So this swing high here on the 3-month, which is the same as the 6-month. Now, what I like about this time frame and being a little bit more granular with this is saying, okay, well, now if we're looking at this, these principles, let's just so that we can kind of come back to this in the future as well when we look at it. Let me just pop this in as our 6-month, yeah? Oh, there we go. There's our 6-month, right? And we're just going to lock that and hide that for a second. We know there's the base down there. We know there's the support. But look at the similarities when we draw this in on the 3-month here, right? How price came up. Remember on the same on the other one? Price comes up. We have that build up. Price sweeps a high here. Then we're looking for price to come down and correct. And it holds this gap beautifully, all right? Then we're saying, okay, well, as prices come down into here, if it holds internal liquidity, we're looking for it to attack external. Well, the extra factor we had here, let's draw this a little bit further across so it stands out, was on the close of this candle, we're holding this bullish gap here, and we're expecting price to draw higher. So we've got this here as our draw on liquidity, which is this bearish gap. Now, again, we'd be favoring short setups whilst holding this gap, but what happens? We get the close above it here, then we say to ourselves, right, price is now seeking liquidity higher. Where's the next liquidity above the swing high? So that's where we are, remembering all the time that once we did close above that, that becomes our inversion gap here. Now, we've taken from this high, all of a sudden, this looks really, really appealing, right? So price has come up, closed above this gap here, drawing us up to take liquidity above this high. In doing so, we had that little close above it, right? So at the same time, we'd probably be a little bit neutral here because it's not a swing failure, this, because price didn't come back down below this low, right? But it has shown weakness. It's more of a deviation. Now on the close of this candle, we have a pre-made target in the form of this fair value gap. And exactly as we've been saying elsewhere, as long as we're here, this can be the draw on liquidity lower. Doesn't mean we're going to get bearish on this time frame. Of course, we're not. We're setting a higher high after a higher low. But price can be bearish down to this, to find the buyers step in and move higher. The top of that gap is set at 56K. And that, for me, is a very significant level because all of a sudden, if we drop down to our daily, it is, in fact, exactly here that this key liquidity pool is resting, in my opinion. I'm just going to make that line a bit thicker so it stands out. This is a really key swing low here. We're currently generating a lot of liquidity above all of these untapped highs. Again, anybody that studied ICT or is aware of the methodology, he calls this low resistance liquidity. I think that's a brilliant name for it because it's just easy liquidity for price to just, rip up towards. So I think we could absolutely come down and take this, and that would really fit in with our 3-month narrative saying, Christ, well, if we're expecting this area to get rebalanced, price has a small resurgence here, starts to get people long again, generates liquidity, those people get hurt. I'm not saying they will. We could absolutely take off from here. At the end of the day, we are reacting from an intermediate term low, a low that sat within a fair value gap, really nice liquidity pool. Yeah. And if we start to get back into structure, then happy days. You know, we covered what our thoughts were on the daily here in terms of these fair value gaps. But for me, it looks really clean that we get this resurgence here. These gaps kind of do their job in rejecting price. Market gets and sweeps this out when people have started to get bullish, flips the liquidity on them. Big players fill their orders here and the market looks and starts to rip again. But really good observation there, Suleiman K. Appreciate you putting that forward for us all to analyze. Thank you. Okay, so going to finish up on Drift and then give a quick look over the news, guys. So Drift, where have we got this one? Ah, friends over at Bybit have got it. Are they lovely? Let's jump on. And take a look at this one on the spot market. Okay, so daily, not a ton of stuff on there, but that's absolutely fine. Let's have a look. Maybe sometimes something like Coin could have a bit more data. Wow, that looks very different, that chart, doesn't it, on KuCoin than it does on Bybit. Interesting. Okay, Super Shogun. If you've got a particular exchange you would like me to check this on, please let me know. I know that they can obviously vary across them, just trying to see. Yeah, so obviously with these kind of smaller cap ones as well, you can see these slight differences. I'm not sure if you're looking to intraday trade. This seems like maybe it's one of those things that's a little bit more of a kind of spot one. So anyway, I'll start here on Bybit. If it is something else that you're looking at on there, mate, please do let me know and I'll switch over the charts. So top down. Interesting thing about this, right? When you've got a coin that doesn't have much history, obviously its all-time high is all the way over here, right? So huge upside at 1.3912, which, just to put that in perspective, is about 200% away from where it is at the moment. Okay. Trading on Drift Dex. Okay. So is it not the token you're interested in, mate? I'll do a little bit of thingy on this if not, but if it is on a different ticker or that you're looking for, let me know. Also, let me know if this price action resembles it, because it might be that it's kind of a little bit more similar to the one that was on KuCoin. But just looking at this, when you've got assets like this, you know, so you've had a launch, yeah, obviously prices come up, big point, huge dump. Price has kind of recovered a bit here as people have kind of bought the dip, and then price is now kind of consolidating. And, you know, I'm not a pattern trader by any means. If you want someone that's exceptionally good at that, someone like Axel Kaibar, for example. But you can see here how price is kind of getting into this triangle. And I'm not saying that that's perfectly drawn by any means, but these triangles tend to form areas of consolidation, right? So price is compressing. Now, obviously, this is going to very much be dictated by what Bitcoin is doing, which is fine. Doesn't mean that we don't still want to plan for this. Now, what I'm looking for here is I'm always saying to myself, right, what has price most recently done? Has it taken a higher? Has it taken a low? And actually on a daily scale here, you can see things are quite balanced throughout, all right? But what I do really like is that we are building a lot of liquidity here, all right, above all of these untapped highs. And like we said before, you can see how price often comes and takes those out. Not the best example, but created that untapped low on the way out. We created that untapped low on the way up. Price came up to this area here, shot back down, cleared that liquidity out there before then recovering. So it's just always worth noting from a liquidity point of view what targets we've got. So this isn't actually the clearest in the world. So I think our upside targets are kind of sat here. The swing high, which is at 0.563. And then below us, obviously, the immediate swing low, which is here at 0.4284. But I do also like that swing low there, which is kind of very, very close to this one. All right, making them relative equal lows. You know, they just tend to be really, really good liquidity pools, as do any of these kind of abnormally long wicks. So actually going to use the 4 hour here to kind of dive more kind of deeper into this one. That's awesome. Cheers, mate. So 4 hour, actually all of a sudden we've gone from a fairly opaque daily into what looks like a super, super clear 4 hour. Now, what we've got here is this big bearish gap. That is what's capping the market at the moment, all right? So that's keeping price down. Price has seen an initial rejection here. What happened? Right, so price took liquidity from a higher, external liquidity, drew down. We would have expected this to hold at the time. It didn't, it failed. Yeah, so this gap here, which should have been a bullish gap, failed. So what's our expectation when a bullish gap fails? I know it's not very far away. We don't make the rules. Yeah, then we expect price to look for liquidity below an old low. Yeah, so fails, draws back in. Yeah, because this bearish gap is then created. We then take external liquidity. Now price is simply drawn back up here into this internal liquidity. Now, keen-eyed amongst you will probably notice that we swept that high in the process. So, okay, BC, if we've taken a higher external liquidity, where are we looking to come back down to? Internal liquidity. Now, this is an interesting one here because that's a sliver of a bullish gap here. We've got 13 minutes. Price closing below that would be a sign of weakness. Our next immediate swing low is down here on the 4 hour, which is at 0.4449. Good day, Peter. How you doing, mate? So if price recovers this and holds this gap, I'm bullish to this high minimum, and then these equal highs up here, right? And obviously this on the higher time frame. One thing that is a little bit tricky about this gap is it's so high. Yeah, so the gap's really high here. So I think what I'd actually probably do is just move this down to an hourly and see if there's anything more, and there isn't. Okay, so we've got really, really kind of balanced price action through here. So then I'm going to say, okay, do we have anything on a 15-minute? And the reason that I'm cycling down the time frames is because one thing that I don't like about this fair value gap being, if this held here, this gap is very high. If this held, I would expect a fairly sizable, bullish uptick from here. But looking at this in the principles of premium and discount, right? So as in, this is like we covered earlier, this is the displacement leg higher. This is our 50%. We normally look for price to react, to draw down and react around here. Well, where we don't have a gap, what we do have is a very small order block here, okay? So I think, and the other thing that we have here as well that we could look to draw into is this breaker block, right? So they're the up candles before price purged liquidity and then shifted structure to the upside, meaning that because this sits here in this lower 50%, I think we could see price drawing down to here and, price catching a bid here to move higher. Again, close below this here. And, I'm pretty sure that we're fairly nailed on to head for 42.84. All right. And yeah, do you know what? We've got a little bit of time, Peter. We'll end up on this one. So Convex Finance or Venus XVS. Interesting. Okay. Well, yeah, absolutely. Why not? If you could pick a winner, Peter, which one are you going to pick of the three choices? We've got time for one more chart. So let's throw ourselves in there and take a look. Just quickly while you decide that. Because of that being so high and expecting a draw lower, that's why I was cycling through saying, okay, is there anything below this 50% on an hourly that we could really look for? And actually, when you're looking to overlay this for confluence, if price does draw down into this, well, we see that we've got a nice hourly swing low below there, as well as this, which is our 4 hour. Price could draw down into this, get people really bearish. And then if we saw a recovery of strength here on the lower time frames, right? So price has this kind of drawdown to, remember, this is higher time frame, so price could easily still recover this. We get back into that bullish structure here, and then this is where we can start look to get back involved to drive price higher. Super Shogun, you're very, very welcome, mate. And then if things aren't particularly clear on the hourly, then I would move to the 15-minute as well. Obviously, the squiggles look a bit ridiculous. And again, we can see that that's reflected here too. So maybe I'd be favouring a little bit of a move lower here at the moment, especially as we look at this, on a 4 hour and we say, okay, in a few minutes, 10 minutes, if we get the close below this gap here, that gap then becomes an inversion. That's then an obstacle price needs to get back above. So I would favour kind of a little bit more downwards movement on this one at the moment. Into it for a few dollars. Okay, so let's take a look. Convex Finance coin. Okay, cool. Okay, I wasn't aware of this, my friend. So let's have a look at this one. I'll take a look on Coinbase and let me know though if there is a different time frame you'd like me to get involved in, and I'll happily take a look. Nice bit of history on this one as well, and the weekly immediately screams clarity, right? So we can see what's happened here. What's one of the most recent things price has done here is sweat the liquidity below this cluster of lows here. Beautiful recovery. Where is price currently delivering from this big bearish gap here? All right, we should do that in the other. So again, you normally see these on my charts as just grey, whether they're bearish or bullish, but just for extra context. Now this is a bearish gap. We had this massive wick up to here, and price has absolutely ripped low. I don't know if that's a news event or if there was something pumped us then, but then the market's been very humbly brought back in. This is a really great example, this candle, on why we wait for the close, because people would have been getting super bullish, And again, typically herd mentality is wrong. People come in too late, longing up here, targeting this. Markets love to just wreck people doing this, take that liquidity, fill loads of asks up here, loads of short trades, and then rip it straight back down. I know it's the opinion. The opinion can sound a bit conspiracy theorist sometimes, but even in my experience in the markets of kind of 8+ years now, actually that tends to be a good way to kind of look at it, see where max pain is, and normally the market wants to drive you there. Everybody bullish here, take out all that liquidity, have a reset here. This is what's going to tell us, I think, in my opinion, what's happening here. Reasons to be bullish here. Well, we've closed above the body of this candle here, but it's a very small body, does make it an order block, but certainly not a high probability one. For me, while we're holding this weekly gap, then it's downside that I'm favoring on the weekly scale. Right, so some really nice liquidity targets, lower for us as well on a daily scale. We have the low here at 2.786, and I love this low here being an intermediate term low. That's a low with inside a fair value gap. And for a very small amount more description on that, you can kind of check out the video from earlier. So what have we done? Well, price has taken liquidity above this high, right? And now it looks to be correcting lower. So what we want to do is kind of build in more context here. And actually, we've swept a daily high here. We're having this correction lower down now. We do have an immediate swing low below us here as well, which is at 2.958. Typically, price heads from liquidity to liquidity. So we're going to look at this on the lower time frame, and that would certainly be my current target, 2.958. 4 hour. Okay, what do we see here on the 4 hour? Okay, 4 hour gave us this beautiful indication. Obviously, we've got the change in time here. So we've got 7 minutes now for the close of this candle. However, it was this inversion here that gave us the indication that price was probably looking to nibble a little bit lower. Look, bullish gap, closed below here. What is our expectation then? That from a liquidity perspective, price is reaching for the next available lower liquidity on that aligned time frame, meaning we've got a 4 hour close below a 4 hour gap, meaning that we then look to drive this lower. And that low there is at 3.108. So this low here, followed by this low here, would be my current targets and thinking. In terms of that, what time did this candle start? We have got some entries. Let's take a look from 9 a.m. Where were we? 9 o'clock. No, I mean, yeah, you would do, because at the end of the day, you've got price reacting here from your bearish gap on the 5 minute. I'm not suggesting that I would be looking at this as an intraday trader, right? I would be saying, okay, sweep of this high. What do we then look for? Price to shift structure. Where does that structure shift take place? When that swing low there is taken out. What do we then look for? We look for displacement, meaning we then look for a bearish gap to be formed within the shift. And then you could take your positions, obviously, here. Price returns to the gap after the shift in structure. You can put your stops above the swing high over here or above the order block because you've set that on the way down. And then you would look to kind of target that immediate swing low down there. What you would then do is pick a sensible place, somewhere like this swing low here or this one where they're relative equal lows to kind of adjust your risk. I would probably move my stops to entry here as long as it's over 1R, which it is. Take a small amount off for the trade, and then you can kind of hold the rest moving down to here, meaning that if you see, a recovery like this, which can be for a whole number of reasons, you've then at least mitigated your risk lower. All right. Yeah, you're very welcome, Peter. Look, unfortunately, Willius, we don't have time for any more charts today, my friend, which I do apologize about, but we will happily take a look for that for you on Wednesday, or reach out to me on Twitter, or come and grab me at the Nest, and we'll see to take a look at that as well. What I do want to just finish on quickly, guys, is just to take a look at the red folder news that we've got this week. So let me just share that with you all. All right, so we can see that we've got a fairly consequential week ahead in the markets. So today, Monday, 1st of July, at 3 o'clock, ISM manufacturing PMI. So we want to keep an eye on that. So, just you can use something like Forex Factory, which is what I use here. They're really, really good. You've got Baby Pips as well, some other ones that offer it. It's just a calendar that lets you know when these red folder news events. That means they're news that are likely to have an impact on the market. That then obviously naturally has that then naturally has an impact on crypto. All right. So then Tuesday, focus on the US markets here. We've got Powell speaking. That guy can just move markets just with the simplest of words, right? You're looking to see whether he's hawkish or dovish, meaning that is he being, positive about there being upcoming rate cuts and a bit more prosperity in the market, or is he really looking to throw a damp cloth on surroundings, so basically trying to make sure that people aren't getting too bullish, and that will have a big effect on Tuesday. We've got the jobs job openings as well. Wednesday, FOMC minutes, that's the biggest thing here as well, but also unemployment claims. We've seen them have a really big effect on the market recently. Thursday, we can see we've got a nice little no news day here. Parliamentary elections in the UK. I can't really see that having much of an effect on the wider market. And then on Friday, the unemployment rate, again, a non-farm employment change. All right. We also have, average hourly earnings update as well. So we've got a really kind of volatile week in terms of news. So do be aware of that. Really easy to keep an eye on this. Not saying, especially as an intraday trader, it definitely pays, a lot for me to kind of be aware of that. But then, from there, just don't let it kind of confuse you too much. But it can be really, really helpful to kind of take a look at that. Typically on the news releases, you get that volatile move straight away, normally to catch people offside before the market steps back into its normal kind of level. So that's how we would process that. All right, guys. So yeah, Willius, thank you, mate. We'll definitely cover that Wednesday if you're around. And we're going to shoot off now. Just kept it a smidge under an hour. I thought today would be a slightly longer one. Wednesday, we're going to be back for our alt request show. Yeah, so you can come there with alt stocks. Can be Sony, can be some obscure altcoins that you've got. If we can chart it, then we will take a look at it. So look forward to seeing you all there. Please do remember, you can come and join us over there. We've got loads of membership options starting for free. You can find the information in the description below. You can also join our exchange partners. For example, I trade with Femex. We're also partnered with Bybit and Binance and a host of others to give you some really good offers and deals. You can find all of that out in the description below. And if you've got any comments, you can come and grab us over at the Bird Nest as well. All right, guys. So thank you so much. Almost 3,000 people live with us today. So big shout out to all of you. I hope you enjoyed the show. If you've got any feedback about it, please do let me know. You can reach out to me at BC_Richfield on Twitter, or you can come and find me with my fam trading over at the Bird Nest. All right, guys. Wishing you all a fantastic week ahead. I look forward to seeing some of you around the nest soon.